It is hard on a day like today to believe that the AI bull market is alive and well, but our next guest does believe that. Let's go to Doug Clinton, founder and CEO of Intelligent Alpha. Thanks for joining us today.
Thanks, Marla.
Let's start with Amazon, which is in after hours dropping. They have a huge CapEx spend, $200 billion for 2026. The estimate had been far less than that. What is your take on the amount of money they're putting into this and whether they will see a proper return out of it?
Well, unfortunately, the AI trade, I do think it's still alive. It doesn't feel very well right now, but I actually think that this CapEx number from Amazon is a sign, and Google too, a sign that this hyperscale build out is going to continue. And so there's kind of this funny thing, I think, going on in the market where it feels like all of AI is selling off, despite us hearing from two of the biggest players in the game, Google and Amazon, in consecutive days, that they're raising CapEx by more than 30% this year to continue to build out and meet demand for AI. And so right now, I just feel like we're in kind of a general risk-off environment. I don't think it's really a commentary that this trade is dead. I think it's just investors don't really know what to think. They see this big CapEx number, they sell it. They're selling the infrastructure players too because other people are. I think we'll eventually weather this and get back to a trade working, but it might take another week or two to get there.
Okay. Do you see a divide right now in how investors are treating hyperscalers? Meaning, are they treating some a little bit better than others, or are they just sort of pulling the carpet out from all?
It feels like after today and seeing what's happening with Amazon, they're sort of pulling the carpet out from all. I sort of understood the Microsoft case last week when we saw the Azure numbers. They were, a touch disappointing. Then we saw Google post yesterday an incredible GCP number, mid 40% growth. The street was looking for mid 30%. The Amazon number today, 2% above the street, I think was a strong number. And so I think at this point, investors don't really care almost to some degree what the actual fundamentals are saying about the business. They're saying, hey, these are big CapEx numbers. We're not sure what to think now. And they're just selling on that reaction.
Okay. On the software side, does the sell-off make sense? Anthropic dropped another new financial AI tool today. We know about the legal contract one earlier in the week. Does the wide sell-off in software in that space make sense to you?
It unfortunately does, and I say unfortunately because our AI, we use software at Intelligent Alpha to do a lot of our stock analysis, to do our portfolio management. Our AI has liked some of these software stocks, and what our AI has tried to do is pick some of the names that we feel are a little bit more insulated from this broader trend toward vibe coding using Claude or Codex to build applications that might compete here. Some of the ones our AI has liked, companies like a ServiceNow, for example, I think those companies are still relatively insulated from being disrupted by, somebody just on the weekend, right, using Claude Code and creating a competitive system. But things like Adobe, which we also own, I think that one, it does worry me a little bit more, because I think now people can go and they can ask some of these LLMs very specific things they want to do with photos, for example, and they might be able to totally circumvent even using a tool like Photoshop. And so I think you really have to kind of pick and choose in this software space the right names to get it right.
Okay, so do you think then, given what you have just mentioned, where yes, some of them will their businesses may not survive what's going on, do you believe the sell-off is going to continue?
I think at some point you have to get a breather, just simply from a market mechanics standpoint. Nothing ever goes down forever. Even when you think about historical analogs, bubbles popping, in many cases you would have rallies in bubble popping scenarios where the market might roar back 50%, even if it was in a downtrend. And so I think the thing you have to think about with these software names is if you're trying to short them, I think you have to be careful in terms of people rushing back into the names when it feels like sentiment has just totally washed out. It feels like we have to be close to that point, Morella, but I kind of thought that 2 weeks ago, and here we are. And so I think that just speaks to the difficulty in timing the market.
Okay, so we talked about software, we talked about wider tech, meaning hyperscalers. What are you doing with your AI plays to move them forward? Are you still looking at energy for data center build out? Are you looking at companies that you think are going to get some benefit from employing AI in their businesses?
We're looking at two spaces. One is in that energy segment that you mentioned. I think the fundamental fact is we just saw these two hyperscalers, Amazon, Google, raise their capex by a huge number. They're going to have to power the data centers that they're going to be building with this incremental capex. And so I think that's good for companies like GE Vernova, where they build turbines to power the data centers, potentially companies like Vistra, again, independent energy suppliers like them. And so we own those two stocks. I think they can continue to work as demand for power stays high. The other place that we've gone is what I would kind of call the AI safety trade. And as we've talked about, there's so much uncertainty in this market. Things are changing so fast. I think two names that feel like they have really strong moats right now are Google and Apple. And if you think about what will the big theme be in AI this year, I think it's probably personal intelligence, an AI that sort of knows you, can act as your personal assistant. Those two companies feel like they have the best rights to figure that market out. And I think that could be $1 trillion market opportunity. And so those two companies, even though Google got beat up a little bit yesterday and today, I think they're a pretty safe place to hide out if you're not sure what to do right now.
Okay, hiding out sometimes works. Doug Clinton, got to leave it there, sir. Thank you for joining us.
Thank you.